All right. Hello, everyone. So I think it's almost 6:30. Yep, 6:30. So we're going to get started. Thanks, everyone, for jumping on. Really appreciate it. As you probably knew when you jumped on, we are going to be recording this whole presentation. So if everyone, I gave everyone the option to turn off mute, but if you can just keep it on mute for now, that would be great. At the end of the presentation, we will take questions, and if a question comes up during the presentation, feel free to drop it in the chat. We'll go through the chat at the end as well. I'm Jen Ortman, and I'm with the Ortman Group. I'm going to do a few introductions here. So tonight, with the weather, we had a few people who weren't able to make it from the team. Carrie Grabowski and me are going to be going through all of the real estate side of it. And then Ian Beamer is going to go through all of our blending, and Christina Perez is going to be our attorney and go through all those terms. And then Sean Kavanaugh is going to go through kind of important information that you want to consider with homeowners insurance. So we're just going to go ahead and dive right in, and I'm going to let Carrie take over.
Hi, good evening, everyone. I'm Carrie Grabowski. I'm with the Ortman Group, as Jen said. So I am going to kind of go over the 8 steps of the buying process. So the first thing is meeting an agent in person and getting to know them a little bit, having them ask you questions, and creating a wish list of things that you are looking for in a home. Your next step is going to get a pre-approval from a lender, knowing what you're able to afford on your new home. And then what's going to happen is your agent is going to set up a search for you, and they will send you listing alerts with anything of new homes that may come on the market that meets like what you're looking for in a home. So based on the criteria that you gave them. And then once you find some homes you want to look at, you're going to go out and the agent's going to schedule some showings, and you're going to go out and look at those homes. And then hopefully you'll find that perfect home and you'll consider writing an offer. And then after that, once the offer gets accepted, you will do a home inspection, as well as an appraisal will get done on the property. And then hopefully everything goes smoothly and you get to that closing table and you get those keys, and you get to celebrate. So we'll talk a little bit more about everything, all those different steps as the evening goes along. So I'm going to talk a little bit about agency and what I would do to represent you as your agent. So I'm going to talk a little bit about the buyer's broker and what we do for you. So we represent, obviously, you exclusively in that transaction when you're purchasing a home. Obviously, we'll go out and show you properties based on the criteria that you mentioned to us. And we'll also help do a comparative market analysis to assess the value of the home you potentially may be putting an offer on. We'll draw up any offers for you, and then we'll present those to a seller's agent. And obviously, the biggest thing, we negotiate for you and try to get you the best offer on that home. We'll also assist you from the beginning to all the way to the close. We also work with your attorneys and the lenders. So we are with you from start to close. And also to answer your questions along the way. And then another thing is that our commission is paid by the listing brokerage at closing. So that's a little bit about what we do to represent a buyer. And then a little bit what we do for representing the seller is we represent them exclusively. You hire us to list your home and to market your home and to get it sold quickly. We do many different type of activities to get attention to your home. We receive offers from other buyers, agents, from other buyers, agents, and we help negotiate on the seller's behalf. So one of the things we do, especially in the past couple of years with the market as the way it has been, many sellers have received multiple offers on their homes. And where a lot of people always think the best offer is the highest offer, there are a lot of other terms that may make an offer more enticing than the offer with the highest price. And then again, we'll assist the seller from when that offer gets accepted, when they accept that offer, to the closing table, and work with all parties. And then again, the buyers, the seller will pay the buyer's brokerage the commission. And then next, I want to talk a little bit about dual agency. So dual agency is when a real estate broker represents the buyer and the seller. You don't see this often, but it does occur. And so what happens is that the broker, the real estate agent, becomes a neutral party in the transaction. And so the broker, basically, there's only certain things that we can do when we represent both sides. So, sorry. We provide like facts to either side of the property. And then we can't disclose certain information without permission from either party. Both the buyer and the seller have to sign a disclosure agreeing to dual agency. And then, sorry, some of these are covered up a little bit when I'm reading on the screen. I want to make sure I'm giving the right information. Oh, and the commission is not impacted by dual agency. So just to let you know, sorry about that, people out there. So next, probably the most fun part is how to set up, like getting started for your search and to start looking for a home, and things that you want to think about when you are thinking about what you want in a home. So some of the things are just area considerations. So distance to work, schools, the community, a community that you may want to live in, amenities such as pools in the town, park districts. Transportation is being on a train line or close to a train line really important to you. Is being close to a highway really important to you if you have to commute to work? And then also, would you rather be more in a rural environment or an urban environment? Do you want someplace out in the country with lots of land, or would you rather be in a city where there's a lot of action? So next thing is different types of homes that you may be considering. So there's single family homes and there's multi-family living. So single family homes is pretty much what it says. It's individual homes with their own lots. So you basically own the house and you own the land. So there's different types of homes. There's ranches, which is considered a one-story home. There's a colonial type style, which is like a two-story type home. There's also your split levels. So split levels kind of when you walk in the home, you kind of have your main floor on some of them, and you might have 5 stairs up and 5 stairs down. Others, you may walk into a foyer and you may have stairs that go up and stairs down. Those are considered your split level type homes. Also single family homes, a lot of times there's basements. In some split level homes, there's a sub basement. Single family homes also sometimes have higher taxes, but you are also responsible for maintaining that home. So you are responsible for all the mechanicals, the roof, the lawn, shoveling snow. All those things are your responsibility. Whereas if you are looking for more of a multi-family type living, which that could be a townhome where you share a wall on maybe either side with a neighbor. Townhomes, you typically see maybe like 5 homes together. Condo is a multi-unit building with multiple floors. So typically you'll see an elevator or have stairs, kind of more like what you think of as an apartment. A coach house, we don't see a lot of those, I think, around here. Those homes are kind of on a property of another single family home. Sometimes a coach house is above a garage that someone may rent out as extra income. Your duplex, which is basically just, it looks like one house, but it has 2 doors and 2 separate entrances. That's your duplex. And then some things to think about with multifamily living is community amenities. So things to think about with community amenities is if they have a clubhouse again, or a pool, a park, sidewalks are some things to think about. Also, some things to think about. They're very low maintenance because you have someone else possibly shoveling your snow and mowing your lawn. A lot of those fees would be in what's called your association fees. So a lot of multi-living has what's called homeowners association fees. And a lot of times you pay a monthly additional fee on top of your mortgage. And those fees would cover your snow removal, lawn care, scavenger, which is garbage, common insurance. Sometimes they even will cover stuff like water and some of your other utilities. It just depends on the association. So just a little bit about that. And then some other things to consider with your search is just simple things like, how many bedrooms are you looking for? How many baths? Is it important to have a primary bathroom? Do you want a 1-car garage, 2-car garage, detached, attached garage? Those are important to a lot of people. Many people may not want a basement. Some people absolutely have to have a basement. Is that important to you? And then another thing, some people love to remodel homes and they want a fixer upper. Like, do you want a home that's already done, ready, waiting for you to move in? Or are you okay with doing some remodeling? Or maybe you even want something where you want to go in and completely gut and make it your own. So those are some things to think about. And then kind of lastly is interior features. Some features of the home, what's important to you, such as a finished basement, again, that primary bathroom, things in the kitchen. Do you want an island? Do you like open floor plan? Gas stove versus electric stove. These are a lot of the things that I know my clients, and I know a lot of other agents, their clients ask them, or things that they want within the home. Do you want wood floors? Is carpet okay? So there's so many different options of interior features of a home, and that's why you have an agent to sit with, talk to, tell them what you want, and then that way when they're setting up your search and sending you homes, or sending you hopefully what you want, and then you'll go out and schedule the showing. And then a little bit next, we always like to talk about fair housing. So some of the things that realtors are bound by the Fair Housing Act. It protects, consumers from discrimination based on race, color, or national origin, religion, sex, disability, familial status. A lot of times people ask us questions about neighborhoods, what kind of people may live in a neighborhood, what kind of crime, information about the schools. As much as we want to answer those questions, we can't. We're bound by this Fair Housing Act and by Code of Ethics. And so we have to follow that. But we always have plenty of third-party resources that we are happy to give to our buyers to do research and about those things that we may not be able to answer when you ask us. So I'm going to hand it over to Jen Ortman, and she will go over the next part. Thank you.
All right, thanks. If you guys can just bear with me for a second, I'm gonna try and move this over a little bit and make sure that everyone is. I don't want to mute myself. Make sure that everyone else is muted through here. So let me do one quick scroll. Okay, perfect. So I am going to, sorry about that. I'm going to go through and talk about the next section, which is, okay, so as Carrie was talking about, initially you put together all the information of what you're looking, and you think about what you want to find, and you go out and you're looking at stuff, and then you find like the perfect house. So I'm going through what happens after you find that perfect house, and how are you going to approach everything. One of the things that we help out as agents is, of course, preparing an offer. So you walk out of the house, you decide that you really love it, and you turn and look to us. And then what can we do to kind of help you walk through the rest of the process? The first thing that most agents will be doing and should be doing are really putting together comparables. So we want to make sure that that our clients are not paying too much for a home, or making sure too that you're paying enough, that your offer is going to be competitive if there's other offers. So we will go and look at the area that you're looking at, find comparable homes, and then walk you through why we think this home should be purchased at this price, and kind of walk you through all of that so that you can make sure that you're not paying for everything. We would ask for the disclosures. The sellers have to fill out property disclosures. In the state of Illinois, there's 3 of them. There's a property one, there's a radon disclosure, and there's a lead-based paint disclosure. And what the seller's doing is basically filling it out, saying if there's anything wrong with the home that they are aware of, and letting you know. It's as good as the paper's written on, but sometimes the sellers are great and disclose something, and then if say that they have reoccurring issues of water in the basement, which is really common around here, you want to know that before you write the offer so that you can kind of take that into account, or maybe rule out the property based on that. If it is a competitive situation, which I'll go through later on, we want to make sure that we're covering all of the seller's hot points. So a lot of times we'll reach out to the listing agent right away and ask, this goes to the other possible competition, are there any other offers on the property? If there are other offers, how are they going to handle that? And kind of have that information going in so that you go in at the appropriate amount right off the bat. We can also look at, which is really helpful sometimes, what the equity is for the seller, which means how much money do the sellers own on the property, if anything. And that can also influence your offer, because if the seller owes more money to a lender than you're willing to pay for it, then it's probably not worth going through and writing an offer, because they're not going to be able to sell it to you without a short sale or something that's going to be a lot more involved. We always look at time on the market, which isn't necessarily the most important thing, but it's a very helpful gauge on if it's been on the market a long time. Chances are it's probably overpriced, or it's not priced at the value that buyers have decided that they're willing to jump in and do something. So, and then a lot of times sellers are a little bit more motivated if it's been on the market for a long time. And then we work with you, of course, to determine the price based on all that information. So when we go to actually writing the offer, most of the time, we're not physically writing it up anymore. We live in the age of electronic documents. So most of the agents will basically compile an offer for you, send it to you to electronically sign, and then they will forward that on to the listing agent and go through, all the benefits of you as a buyer and why they should take your offer. But the things that we will need as agents to be able to write that offer is first going to be your legal names. Ideally, if you are getting a loan, you want those names to match up with what's on your pre-approval. It makes everyone's lives easier. So if your pre-approval doesn't necessarily have your legal name, we still might want to match it up. The starting purchase price, that's going to be what price are we going to do that initial offer at? And in this market, sometimes you won't get another chance, sometimes you will. So we kind of walk you through what's going to be the best strategy on that initial price. Earnest money is basically money that you have to turn over at the time that the contract is executed, or within a couple days of that. It's generally going to be either a money transfer to the listing brokerage or a check, and it's basically holding that property for you. In the first 5 days, if you have inspections and you're able to get out of the contract really without any problem at all, if you decide you're not going to move forward, and you get the earnest money back. After that, if you get through all the inspections and the attorney review, then your earnest money is more in jeopardy if you don't actually go to the closing table. So I always like to compare it to like a security deposit. Like, yes, we are going to go ahead and be at that closing table. So if you are writing an offer, I usually suggest the more earnest money. If you really like that house, the better. Closing date, that is typically going to be 30 to 45 days from the time that we execute the contract, and we will write an exact closing date in the offer. So that will be agreed upon during the offer process, and then everyone is moving towards actually closing on that day. Tax preparations are very confusing in Illinois because we pay taxes in arrears, which means that right now, for instance, in Cook County, all the counties are different, but in Cook County, for instance, we are actually paying 2022's taxes, even though we're in 2023. So we do walk the buyers through this, but the idea behind a tax proration is essentially taxes always go up in Illinois. So when we write the offer, we don't necessarily know what your exact tax bill will be when you get that tax bill in 2024 for 2023. So we're going to ask the seller generally to give a tax proration a little bit higher than what the current taxes are, like 105 or 110%. The seller is required to, at closing, give you a prorated dollar of every day that they have not paid taxes. So because we're paying for taxes last year, it might sometimes be 8 months, sometimes almost a year worth of tax credit that you're going to get at the closing. So the seller is basically paying for taxes every day that they've lived there. Your loan information is going to be really important. I'll let Ian go through all of that, but we do need a pre-approval for every offer. So it's important to get all that lined up before you even go out. If you need closing costs, we want to identify that during writing, while we're writing the offer. It's not ideal in this type of market with low inventory. So you definitely don't want to ask unless you definitely need them to be able to move forward. But if it's something that you do need, the lender will probably kind of walk you through what you would need, and then we would put that in the offer. You are going to need a real estate attorney, not to write the offer, but once we get it executed. So a lot of times we will recommend an attorney during writing the offer. Like I said, we can do electronic signatures. So that's kind of the whole gamut of what's going to be when you're writing an offer. Sorry about that. Go that way. So let's say, which is kind of the situation right now, that everyone wants the same home. We've gone through lots of ups and downs through COVID, but we're back at, and this happens a lot of times in January, February, March, because there are usually people are not in Illinois looking to list their house around Christmas and the winter months. They want to list their house when the lawns are beautiful and the weather's great. So we always have low inventory at this time of year, which also drives multiple offers. So if everyone, especially if the house is a great house and it's priced well, many times you walk in and there will be more than one person who wants to write an offer on there. So if that's the case, you really have to work with your agent to make sure that you're positioning yourself in the best way possible. It's not ideal, but if you want that, then you're going to have to kind of jump through some hoops. Some of the things that we suggest to our buyers is finding out what's important to the seller. So that involves, we as buyers agents do not talk to the seller at all. We have to reach out to the listing agent and then hopefully ask them, hey, what's going to be important to the seller? What's their hot buttons? You know, how can we make this offer look more attractive? Obviously, we want to go in with the most aggressive offer price. A lot of people think, okay, well, if we have multiple offers, they're going to come back and ask for what's called best and final, which is your best offer and your last offer. Many times you don't even get that opportunity. So if you go in strong right off the bat, then sometimes you can win it before they throw it out to everyone. Escalation clauses, which are getting to be a little bit less nowadays because they're kind of convoluted. But basically what you're doing is you're going in with a certain price. Say on a $200,000 house, you're going in at 205. And then what you're saying is, but I'm willing to pay more. So I will give you an escalation clause saying that we can escalate the price up to maybe 210,000, and I'll pay $1,000 more than what any other offer is out there. The problem with that a lot of times is A, the sellers get very confused, and B, if everyone comes in with the same escalation clause, you're all kind of back at ground zero. So more and more, we're just having buyers write a really strong offer. If you're willing to pay 210, then just write the offer for 210. You might leave a little bit on the table, but then you get the house you want. So and this has also been banned by some realtors, but a lot of times we recommend writing a letter, just kind of appealing to the seller, telling them how much you love their home, how excited you are to live in their home, and how great the home is, because there's a little bit of emotional pull a lot of times. A lot of the sellers, especially at this time of year, going back to that, don't necessarily want to move until June. So what you can do in your offer is you can offer what we call a rent back. So say you're going to close March 30th, but the seller wants to stay there until June 1st. You can close on March 30th. You can get that interest rate that you want. And then what you do is you rent it back. The seller stays there and they pay you basically your mortgage until they move out on June 1st. If you want to get really aggressive, you can offer a rent back with no payment. So those are very popular because it allows the sellers not to have a double move, especially if they need the proceeds of their place in order to buy a new place. I always suggest offering more earnest money because you get your earnest money back when you close. You get to use it as a down payment. Say it's more than your down payment, more than your closing costs, you'll get a check at closing. So the more earnest money, the stronger you look as a buyer. Having a very flexible closing date is really, really important. And then the other ones that are covered up on my thing are the contingencies. I just need to double check. We can do an as-is contingency. Should I move this over? There we go. A mortgage as-is contingency. So if you're removing, every contract has what we call contingencies, which is basically your way to get out of the contract if something falls apart. So buyers get what we call mortgage contingency if they are not paying cash, and that you're just saying that you will basically secure a mortgage, and if you don't secure a mortgage, then you're not going to close. That's your contingency. You can waive that. You can say, I don't care if I'm getting a mortgage or not, I'm just going to go ahead and close. Now, of course, if you don't get that mortgage, then you would lose your earnest money. So you got to be really confident that you're going to get that mortgage if you're going to remove that contingency. Lots of people come in with what we call as is. As is kind of a really nice thing to give to a seller. You're telling them that you're not going to ask for anything during the home inspections. But understand, even if you write it as is, you can still cancel the contract. You still have a home inspection. If you find a lot of things and you're not happy with it, you can cancel. If you find a lot of things and you're not happy with it, you can still go back to the seller and say, I'm going to cancel if you don't fix this. Typically for as is, the only time you would go back and ask for anything is something's really, a deal breaker and it's just a horrible thing to deal with, like the furnace isn't working at all or the roof needs to be replaced or something along that lines. And then, which I don't really ever recommend, you can just waive an inspection altogether. So you can say, I'm just gonna go ahead and buy this house no matter what happens, in inspections or what's going on with the house. So most people will not do that because you want to definitely have a professional home inspector come in and check it out. But it is an option. If you say you're a contractor or someone who knows houses really well, you could just waive the inspection. That, of course, would look really attractive to a seller. So we went ahead, we won the offer, and we're under contract. The next thing that we're going to kind of go through at that point is just talking about, sorry, I keep on moving these back and forth, is kind of the steps after the contract acceptance. And then we'll get into our partners because they deal with a lot of that. So us as agents, we're really working with you on finding that house, making sure you have a good house, making sure that you have the right price. And then once it goes under contract, we are still involved. We'd like to be involved, but a lot of it turns over to other people. So the first thing that's going to happen when you get under contract is we're going to have to deliver your earnest money that you agreed to on the contract. And depending on who the listing agent is, there's different ways. Sometimes the listing agent's company holds the earnest money and sometimes attorneys hold it. So you'll get the directions and you want to deliver it. Meanwhile, you're going to be working with your lender to fill out an application. It's really important to get that application filled out as quickly as possible once you have that property identified. We would schedule our inspections. Like I said, you have 5 business days from execution of the contract to do any type of inspections and have your attorney review period. Once we get past those 5 days and you've requested what you want and the sellers have responded, then we close the attorney review period. It's basically acceptance on both sides. That's when you would ideally order the appraisal. If it's dragging on, sometimes you have to order the appraisal before that. You want to obtain homeowners insurance way ahead of the closing, so you're not walking into the closing trying to get homeowners insurance. And if there are any issues that come up, and Sean will go through all that too. And then once you do the appraisal and the homeowners insurance, basically the rest of the time that you are under contract, you're working with the lender to make sure that you have everything they need so that you can get what we call clear to close, which means the lenders approved you for everything. They're drawing up the documents and they're sending them on to the title company who has you sign everything. On the day of the closing, we do the final walkthrough to make sure the house is in the same condition that you saw it at the last time you were there, usually home inspection, and then you're at the closing. So that's kind of the whole process after contract. I am going to turn this over to Ian Beamer, who is our preferred lender, and he will go through all the confusing lending terms for you guys. Thanks.
Hello, everybody. Ian Beamer, guaranteed rate. Sorry, I'm
Yeah, wait.
little,
Go up and see.
little bit taller.
Make sure you're in the screen.
Well,
There we
I'm
go.
not quite. I'm missing the top of my head. That's all right. We don't need the top of my head. All right. Ian Beamer with Guaranteed Rate. Appreciate Jen letting me be here tonight. Just want to go over just real quickly some of the mortgage terms, options, the lending side of the home buying process. So first step is typically to get a pre-approval. So we would have a conversation, we'd pull your credit, typically go over income, assets, what you're comfortable spending, what you're comfortable spending monthly and at closing, your down payment, and then just figuring out which program option might suit you best for this purchase. So are you looking for the lowest rate? Are you looking for the lowest payment? Are you looking for lowest down payment? Are you in a situation now that you might not be in 6 months, 2 years? Is this something we want to refinance you out of at some point in the future? So the pre-approval process is, it is, like I said, full credit report. We run you through an automated underwriting system. So we, as long as you're W-2'd, as long as I have a salary or you're paid hourly, you're working full-time, we'll have these conversations. Sometimes we even want to document your income. If we're kind of pushing the envelope, we want to make sure that we're not going to have any surprises down the road. So you do need that pre-approval process in place before you make an offer, as Jen disclosed just a few minutes ago. So pre-approval process is a huge step. There's another option that's kind of a little bit more in depth that I'll talk about in a couple of slides here. It's called the power bid. We'll get to that in a second. But the pre-approval process, we'll figure out what kind of loans, what kind of mortgage options we might be most comfortable with, you might be most comfortable with. So just real quick, conforming loans. Conforming loans, if you've ever heard of the entities called Fannie Mae, Freddie Mac, I did not come up with these names, but Fannie Mae and Freddie Mac kind of govern all the criteria. This is why all loans are 30 years, typically amortized over 30 years or shorter. If you get an adjustable rate loan, which we'll get into later, an adjustable rate loan is just a loan that's not fixed for the life of the loan. It's not a fixed rate. It's typically a 3-year, 5-year, 7-year, 10-year adjustable rate. So these are fixed for 3 years, 5 years, 7 years, or 10 years. But Fannie Mae and Freddie Mac set those guidelines, and they tell us what your debt to income ratios can be, what your credit scores can be, et cetera. So typically, if you're a first-time home buyer, you can put down as little as 3% on a conforming loan. If you're not a first-time home buyer and you're not in a designated area, you're not below a certain income limit, you're not, there's no special program for you. Minimum down payment, if you're not a first-time home buyer, is at least 5% for a conforming loan. So like I said, they do offer fixed in ARM products, and the credit scores go down to about 620 for conforming loans. So the other option would be FHA. So FHA is governed by an entity called Ginnie Mae, not Fannie Mae, not Freddie Mac, but Ginnie Mae. Sally Mae does your student loans, if you're familiar with them. So Ginnie Mae kind of governs FHA if you're a veteran, VA, and then they also do USDA, which we don't do a lot of around here. But if you're purchasing farmland, something like that, we can talk about USDA loans. For government loans, if you're purchasing a condominium, this gets a little bit trickier because the condominium association has to be FHA approved or VA approved, whatever financing you're getting with these Ginnie Mae products. So that is sometimes already in place, and other times it's not in place, and other times it's just not going to be in place. So we definitely need the association's help getting the project to meet Ginnie Mae guidelines. So there's rental percentage limits. There's limits on how many units are behind on assessments. There's all kinds of things that need to meet Freddie Mac or Ginnie Mae standards for the condo approval. So FHA does not have minimum trade line requirements. Typically on a conforming loan, you've got to have at least 3 trade lines, like 3 credit cards, 3 installment loans, something for at least 12 months. FHA does not have those minimum requirements. And then they are a little bit more lenient on credit scores where they go down to 580. They also do not adjust rates nearly as much as conforming loans adjust rates if you're not quite perfect on credit. So up until about a month ago, perfect credit on a conforming loan was 740 or better. Today it's 780 or better for a conforming loan. So Fannie Mae and Freddie Mac just rolled out these changes this month. So Ginnie Mae is a lot more lenient on credit scores. Moving on, the power bid. So this is a little bit, this is a more in-depth pre-approval. The power bid process does the same thing. We pull your credit, we run you through an automated underwriting system. We will actually document income, we'll document assets. We're going to have you sign at least some disclosures. The key one being your certification to authorize release of information, which is just rolls off the tongue. But it basically allows us to check your employment, your assets, your compensation, your work history, the whole 9 yards. So we don't have any surprises. So this is basically a fully underwritten pre-approval, aside from obviously title, because we don't have title, we don't have a property yet, and we don't have appraisal. So aside from those 2 things, you make your offer, and then you can better compete with cash offers, people that are, as Jen was touching on, people that are waiving the mortgage contingency, which is less than ideal if you are getting financing. But if you really want the house and you're in a pinch, you might be a little bit more comfortable waiving that mortgage contingency after we've been fully underwritten. So this is a great option. The approval is good for 90 days. We can actually lock in an interest rate if needed before you find the property. So that interest rate can be locked up to 90 days. I don't think you really need to do that in this environment. Interest rates are kind of teetering back and forth in the mid 6s right now, but generally speaking, I believe interest rates should get better later this year. So as time goes by, depending upon what your timeline is, interest rates should improve. Inventory, we'll let Jen and Carrie cover that stuff, but that's the power bid. Another really popular program right now is IDA. So the Illinois Housing Development Authority. We have full access to offer all these products. But these are really, really great, aggressive, discounted products, but they do have income limits. So you can't typically make more than about $125,000 annually, and they'll look at everything. They'll look at your side income, they'll look at your part-time stuff that we maybe don't use to qualify you for a mortgage. IDA still uses to make sure we're underneath that $125,000 a year limit. But these are discounted rates. Typically, they give you some sort of down payment assistance on top of the discounted rate. So the Opening Doors program is a really popular one right now. They give you $6,000, flat $6,000 at closing. And then that is basically forgiven over the next 5 years. If you pay off the loan before that 5 years is up, you do have to pay whatever that unused portion is back to IDA. So if you refinance in 2 years, you do have to pay part of that $6,000 back. Just a heads up there. And they do have purchase price limits, which are just under $350,000 in this area. Strict debt to income ratio on IDA products, 45%, which means if you make $10,000 a month, not more than $4,500 can be going towards your total housing payment and all other liabilities on your credit report. That's your debt to income ratio. So 45%, sometimes on conforming loans, you can go a little beyond that. FHA loans, sometimes you can go to 50 or maybe a little beyond 50. So definitely something we want to pay attention to. You do have to put down at least $1,000 or 1%, whichever is greater the purchase price. Other than that, you can get the seller paid closing costs, all kinds of stuff. Let me know if you guys have questions. I'd be happy to help. I'm going to turn it over now to Christina Perez, who's going to take us through the legal stuff. Thank you.
Thank you, Ian. Hi, everyone. I'm Christina Perez. I'm just going to try to adjust the camera here a bit. I am an attorney here in Arlington Heights at Drost, Kiblahan, McMahon, and O'Connor. We're right in downtown next to Jimmy John's and Sweet Teas. I typically don't get involved until the contract is signed, although sometimes clients might call ahead of time with some questions. Just a quick overview of what my role is. Essentially, we'll review the contract, we'll suggest some changes. If there's anything that we feel needs to be changed, I usually have a handful of standard changes every time. Because it's always the same form contracts that are being used. We'll help you through the inspection process. We'll help you figure out what to ask for, what's appropriate, what's not, and then help negotiate that with the seller's attorney. We'll monitor financing dates. So if you do have a mortgage contingency, we'll make sure we're meeting all the requirements for that and asking for an extension if that's necessary. If you're buying a condo or some other multifamily type unit, we'll go through association documents with you. And then we'll get you all the way to the closing table and be at the closing with you to go through loan documents and actually closing the transaction. So there's a lot of legal terms that come up and are sort of used interchangeably and in different situations and can mean different things. So I'm going to start with the first one here, escrow. General overview of that is you've got a neutral third party that's facilitating something. So it could mean that you've got a listing agent that's holding earnest money. So that earnest money is being held in escrow. Nobody's allowed to touch it or disperse it unless both sides agree to it. Another example of the term escrow in a real estate transaction would be a title company acts as an escrow agent when they close the deal. They're a neutral third party. They're going to follow a buyer's lender's instructions. They're going to make sure a seller can give clean title and essentially close the transaction. And then last example for escrow would be Jen was talking about renting back earlier. If a buyer is going to allow a seller to rent back, we generally want to have the seller put up some money for two reasons. One, we want to make sure they move out on time. And then secondly, we want to make sure that if there's any damage that's been caused during that rent back period, that there'd be money there to cover it. So money would be held in escrow, usually by one of the two attorneys, the seller's or the buyer's attorney. If the seller moves out on time and there's no damage, the money gets returned to the seller. But again, both parties need to agree in writing to return it. Or if there is damage, then the money is there to be used to pay for that. Title is another term that's sort of used to mean a lot of different things. Generally speaking, it means how somebody holds title to property. As a seller, you might hold it in your own name, you might hold it with your spouse, you might hold it with another family member, you could hold it in a trust, any of those things. So it's important when you're accepting an offer as a seller that you know how you hold title and you sort of sign it properly and in the right capacity and authority. And when the next way that we use the term title frequently is when we're referring to a title search. So when the contract is first signed, a title search is ordered through a title company. And that will not only tell us who's in title, who owns the property and how they own it, but will also tell us what kind of liens are recorded against the property. So does the seller have a mortgage? Do they have a home equity line? Are there any unpaid real estate taxes? Are there any IRS liens? Things like that. And then on the buyer side, we want to make sure when we get that title search that who is actually in title matches up to who signed the contract, because those need to match. Otherwise, you don't have a valid contract signed by somebody who has authority to sell. The next two phrases here, easements and encroachments, basically those, so at closing, we're gonna get a survey from the seller. And that survey is a visual depiction of what the property looks like. Sort of I always tell clients, if you're a bird flying overhead and you're looking down, that's what the survey looks like. It's an AutoCAD drawing. It's gonna show us property lot lines. It's gonna show exactly where the house is within the property lines, how many feet from, the front lot line to the house, and all of those different measurements. If there are any easements, they would be depicted on that survey. So an easement would be an agreement to allow some third party to access your property in some way. 99.9% of the time, the easements that we see around here are always utility easements. So ComEd has easements, Infinity, all the internet, AT&T, those types of companies. We obviously all want water and electricity and gas. So it's a good thing to allow them to have these easement agreements. They're usually along the 10 or so back feet of the property. Doesn't mean that you can't use those last 10 feet, but it just means that if they ever had to do repairs to their lines, they would be able to come and access it. So we generally tell clients, don't build anything on those last 10 feet. Or, if you have a shed or something like that in the back corner of your backyard, you want to make sure it's movable. So that, again, if they ever needed to make repairs to those utility lines, they could easily access it. And again, that would be depicted on the survey. Next, we have encroachments. So encroachments would be an improvement on your land, would be your house or a shed, a jungle gym, a pool, anything like that. So if your improvements on your land accidentally go over the property line and are on your neighbor's land, maybe it's just a couple inches or so, that would be an encroachment of your property, of your improvements on your property onto your neighbor's land. Or vice versa, there could be encroachments from your neighbors that are coming onto your land. It's pretty rare to see anything that's really sort of consequence with respect to encroachments. The one we see most often are fence encroachments. It can be difficult for a fencing contractor to get that fence to go exactly right along the property lot line. So oftentimes it'll meander a little bit, might be an inch or two over. But that kind of thing is not a big deal. And there's really not much we can do about it from the buyer side, because no title company will give you title insurance over that, because a fence can be moved relatively easily. And then lastly, contingencies. This basically refers to, as Jen mentioned earlier, ways that you can get out of the contract. So there's three major contingencies that we typically see in every contract, and there's a couple of sort of more minor ones. Initially, we've got an attorney approval contingency and an inspection contingency. Those start to run the first business day after the contract's been accepted by the seller, and they typically run for 5 business days. So in those initial 5 business days, you want to get your inspection done. Let me know if there's anything that you want to raise with the seller in terms of inspection issues. And at the same time, I'll be reviewing the contract, and then I'll send out a combined attorney approval and inspection letter. If we can't reach an agreement with the seller on those issues raised in the letter, either side can terminate. The next major contingency is the mortgage contingency. We've talked about this a number of times already tonight. Essentially allows you to terminate the contract if you're unable to get approved for a mortgage. But you have to put specific terms into your offer. So you're going to put a maximum interest rate and a maximum loan amount, things like that. So you can get a mortgage at 7.5%, but your contract says you can't get, have an interest rate higher than 7.25%. You're going to be able to terminate. And then there's a couple of more minor ones. If you're buying in a multifamily situation, there's an association. You're going to have a 5 business day period to review associations' governing documents, their budget, and then something called a 22.1 disclosure, which is a statement that the association has to give you, and they're required under Illinois law to do this, to let you know sort of what the health of the association is. Are they involved in any litigation? Are there special assessments that are currently pending or that they anticipate will be coming up in the next year or two? What do the reserves look like? Do they have enough money set aside to handle, some unexpected maintenance or repairs that might come up, that kind of thing? So again, if you don't like what you find during the review period for those association documents, you can terminate. And then lastly, there's two fairly minor ones. I almost never see these come up, but I'll mention them quickly. You've got 10 business days to figure out if you can get homeowners insurance at a marketable rate. Again, it's very rare that that's ever a problem, so it almost never comes up. And then also 10 business days to find out if the property's in a flood zone or not. Generally speaking, in Chicagoland, we only see flood zone properties if you're right along like Lake Michigan or Des Plaines River, Fox River, or if you're on a lake or something like that. But the reason why people care is because if you want to get a loan, you're going to have to then get flood insurance, which can be fairly expensive compared to homeowners insurance otherwise. So those are your contingencies. I'm going to move on to the next slide here, talk a little bit about clear title and why you need it. So I mentioned already that once the contract is signed, the title search is ordered through the title company. And again, that shows us what kind of liens are recorded against the property. The reason we care about clear title is we want to make sure you're not going to take title subject to a seller's old mortgage or unpaid taxes from 5 years ago or 10 years ago, or maybe there's an IRS lien, anything like that. So at the closing, the seller buys the buyer a title insurance policy. It's called an owner's policy. And this, again, gives you insurance that if there's any kind of issue with the title from the day of closing going backward in time, you're covered. You can make a claim if something comes up. So if you find out the day after closing or a year after closing or 5 years after closing that there's unpaid taxes from 10 years ago, you make a claim against the title insurance policy and it's covered. The other policy that's required is if you're getting a loan, the buyer is going to have to purchase what's called a loan policy. That's basically title insurance policy ensuring to your lender that the buyer's entitled once the closing is finished, so they're the actual owner, and that that the lender's mortgage is first in terms of priority. So if the lender ever had to foreclose on the mortgage, nobody would be ahead of them in terms of priority. So their mortgage would get paid first if a foreclosure did happen. So again, seller buys the owner's policy and then a buyer buys the loan policy. There's a lot of title charges that go along with all the closing and just a bunch of fees that get charged. So the main one on the buyer side is going to be our closing escrow fee. That's going to be the fee to close with the title company. It's pegged to the purchase price, which is I've always thought was kind of silly because you're going to do the same work to close a transaction if it's a $200,000 house or $1 million house, but that's how they handle it. And so typically your average house, say $350,000 to $400,000 house, your closing fee is going to be somewhere around $2,000, maybe $2,500. There's going to be a bunch of endorsements to your lender's policy that you're going to have to pay for. So the lender says, thank you for buying us this title insurance policy, but we want some better coverage in a couple of specific areas. So they might require some endorsements, and those are usually $175 each. There's typically 2 to 3 endorsements required. There's also recording fees to record your deed and your mortgage with Cook County or the county in DuPage County, whatever, Lake County, whatever it might be. In Cook County, it's $98 per document. So usually it's just the 2 documents, the deed and the mortgage. And then there's honestly a bunch of like miscellaneous sort of crap fees. Every title company is going to charge them. There's really nothing you can do about them. Those probably add up to another, I don't know, a couple $100, just to give you an idea of what those fees might be. And then lastly, we've got transfer stamps and transfer taxes. So State of Illinois, Cook County, and some municipalities will charge a tax on the transfer of property. And the way that they issue that is they actually issue like a little tiny stamp that gets like affixed to the deed. It's like a sticker and you put it on the deed. So really they're sort of the same thing, but seller in Illinois pays the Illinois tax and seller pays the Cook County, Lake County, DuPage County tax. Some municipalities will charge a transfer tax, some don't. Arlington Heights, for example, does not. Other municipalities right around us do. Palatine does, Mount Prospect does. So it just varies depending on what city or suburb that you're in. And who pays the municipal transfer tax, the local suburban one really depends too on the suburb. Some of them require it to be paid by the seller. Some say it should be a buyer charge. If you're buying in the city of Chicago, there's both a buyer and a seller transfer tax that gets paid to the city of Chicago. So just something to keep in mind there. It is a little heftier. It's probably the biggest one in the area is the city of Chicago one. That is all I have. So I'm going to turn it now over to Sean Kavanaugh. He's going to talk a little bit about insurance. And if you have any questions, please put them in the chat and we'll hit them at the end. Thank you.
Hello, everybody. How are we doing today? My name is Sean Kavanaugh with Goosehead Insurance. I'm here to talk to you guys about what comes next with homeowners insurance once we're under contract, right? So once we're under contract, it's gonna be time to start gathering some insurance quotes, figuring out what's gonna be best for you and getting those quotes over to your lender for their underwriting to start processing, right? So first thing I want to talk about here is just a couple of key terms, or actually factors that play into what your homeowner's insurance is going to cost, right? So obviously the location of the home, right? A home in coastal Florida is not going to be the same, insurance pricing as a home here in the northwest suburbs, Arlington Heights, Prospect, and such, right? So that's going to be the first one. Second one is going to be the age of the house itself. Now, in this area, we have a kind of a mixture of homes of all different ages. In different parts of the Chicagoland area, you might find homes as old as 1890s and such. Those in general are going to be typically a little bit more to insure, a little bit more pricey. But in general, insurance in the Illinois market is not going to be too expensive, right? Now, next up is going to be the replacement cost of the home. Now, this is something I want to kind of hit on, especially for first-time home buyers, right? So it's important to note that what we want to insure your home for actually has nothing to do with what the market value is. What we want to insure it for is how much is it going to cost to rebuild the same home from the ground up today, right? Now, the reason for that being is in the event of a total loss, knock on wood, something like a fire, a tornado, something terrible like that, insurance companies unfortunately do not just cut you a check for the amount on your policy, can't cash out on the mortgage and just carry on with your life. What they're going to do is, let's say you buy a 2,000 square foot, 2-story home with a basement, 2-car garage. They're going to come and rebuild that same home to the same size and quality, right? So what we need to do on the insurance end of things is figure out, okay, how much is that going to cost today? Using the cost of labor and the cost of market prices for building materials today, right? So with inflation and everything else, those two things have gone up quite a bit in the past couple of years, right? So make sure your insurance agent is providing you with a copy of the replacement cost estimator, which is essentially a software that they use to enter all the details of your home, and it gives them back out an estimate, right? Now, that's going to be the biggest key right there, is making sure that they're covering your home for the replacement cost and not the market value, right? Now, carrying on, some of the other factors that are going to play into cost of insurance is going to be the type of construction, right? Most homes are going to be built with a wood frame, bricks on the outside. Some are going to have vinyl siding, and maybe if you're in a more rural part of Illinois, it might be a log home, right? All those different things are going to factor in to pricing differently. Now, next up is something called protection class. In this area, you're not going to typically have to worry about it, but this is going to be how far you are from a fire department, a water hydrant, or a fire hydrant, or any other kind of water source that your local fire department might use. Now, next up is going to be your coverages. Obviously, different homes are going to require different coverages. Homeowners insurance covers more than just your home itself. It might cover other structures on your property, things like a fence, shed. You have a detached guest house, all covered there. As well as how much personal property, right? How much is, your clothes, your TV, your furniture inside the home cost, right? All of those are obviously going to factor in. Next up, we're going to talk about claims history. So each insurance company is going to look at claims history as a little bit different. They might look back 3 years, 5 years, or 7 years, right? Some are going to look at just the property that you're purchasing, right? So maybe the current owner might have filed a claim a couple of years ago. That can impact the price of the insurance. Now, other companies might look at claims that you made, maybe, if you're a first-time home buyer on your renter's insurance, or if this isn't your first time buying a home, you're looking at that second, third home, they're also going to be taking a look at, claims that you had on your other properties, right? Now, the last and the biggest factor about how homeowners insurance priced out is something called target markets, right? So target markets is kind of where I come in as a broker. So each different insurance company is going to take a look at all these factors that we just discussed, right? The age of the home, the location of the home. And what they're going to do is they're going to kind of figure out, okay, which categories, which of these factors do we care about the most? And they're going to decide their target market, right? Their clients that they want to insure, right? Well, how are they going to win your business? When you fall into their target market, they're going to win your business by giving you the lowest premium, right? So figuring out which insurance company wants your business the best is going to result in you getting the best coverages at the best rate. All in all, what we're looking for is to find the most value, make sure that what we're paying for in the homeowners insurance is going to be there to protect you when you need it, right? So, for example, if one insurance carrier says, it's going to be $2,000 a year, and the other one says $1,000, the coverages are all the same. That homeowners insurance that's $2,000 isn't going to be twice as good customer service, twice as good record on paying out. Essentially, they don't want your business as bad as, say, another carrier, right? So those are going to be the biggest factors that are going to come up with the pricing of your homeowners insurance. Now, moving forward, guys, we're going to talk about some of your optional coverages here, right? So when it comes down to homeowners insurance, it's going to cover things such as the structure of your home itself, other structures on your property, personal property, aka your belongings. They're also going to give you coverage for if you get displaced while your home is being rebuilt or fixed, right? As well as family liability, medical payments, and a few other things that we can kind of touch base in once you get under contract, right? But when it comes to the Northwest suburbs, there's 3 optional coverages that you absolutely need to have a conversation with your insurance agent about. The first one is going to be something called water backup or sewer backup. This is going to be the second most common claim in Illinois. Now, most buyers are going to be under the assumption that this is something that's automatically covered by your homeowner's insurance. Unfortunately, it is not, right? Any person who has a basement in this area needs to definitely obtain this coverage, right? Like I said, it's going to be an endorsement. It's not going to come automatically included. You need to talk to your agent about it. The best way for me to define it is anytime a pipe or a drain is kind of working the opposite direction, right? Instead of water going down, you got water coming back up. So what you might see in this area specifically is we'll get a lot of rain, not too different than today, a couple days in a row. And what'll happen is, all that water kind of goes into the sewers, into the drains out in the street. After a certain point in time, the pressure might actually change. And now you got a foot or two of water in your basement, right? Most people are going to assume that this is flood insurance, but they're actually 2 separate things, right? So like I said, water backup coverage is going to be super important. You don't want to find yourself in a position of having a foot or two of water in a fully finished basement and having no coverage for that, especially right after you bought your home. My professional recommendation is, because this can be expensive, you for sure want to buy this for at least the first year that you own the home. See how the water sits, get used to the skeleton of the home, see what it's like when it rains, right? If at the end of the day you decide that's something that you're not necessarily looking forward to, go ahead and take it off after reading, okay? Perfect. Next up, we're going to talk about something called service line coverage. So service line coverage is going to be basically coverage for anything that happens to any of the mains on your property, the gas main, the water main, the sewage main, anything like that, right? So in this area, there's a lot of homes built in the 60s, and in the streets, what you'll have is you have those 3 things, the sewer main, the gas main, the water main, that run underneath the street, and they'll branch off into each individual home. Well, in the event that one of those lines breaks under the street, that's going to be, the city, the municipality's responsibility to fix that. If it breaks under your property line, that is going to be your expense to take care of, right? Now, a minute ago, you heard me mention there's a lot of homes built in the 50s and 60s around this area. A lot of those homes have clay pipes that are a little bit older. Tree roots can go into them, crack them. And let me tell you, it's about a $5,000 to $7,000 expense to have those replaced. That's not going to be a fun day for you, especially once you find out that your homeowner's insurance doesn't cover it. So that's why you guys need to make sure that you have that service line coverage, right? Now, last of the optional coverages that we're going to talk about is flood insurance. Kind of as some of the other speakers mentioned, it's not going to typically be something that's required in most parts of Illinois, but that obviously doesn't mean that you can't flood. Now, flood insurance is going to be referred to as outside water coming in. And what we mean by that and why you need a separate policy is no homeowner's insurance policy actually covers that, right? So what you want to do is definitely get some quotes for flood insurance, see how it factors in price-wise. And at the end of the day, just know whether or not you're covered in the event that something like that happens. Now, last up, we're just going to talk about a couple key terms before I turn it over to Jen. And the big one is going to be replacement cost. So what you're going to want to do, and the one thing I want you to take away from this is that at the end of the day, the remainder of your time as a homeowner, you're always going to want to verify that your homeowner's insurance is at full replacement cost. What that means is they will not ever factor in depreciation for things such as the house itself, the age of the roof, or your personal belongings on the inside when determining how much to pay out on a claim. Actual cash value is going to be that depreciated value. That's bad, run away. Figure out why someone's even offering you that in the first place. And absolutely last thing is going to be your deductibles, guys. This is your out-of-pocket cost before your homeowner's insurance carrier covers the rest of the damage for any unexpected events that might happen. In the Midwest, we're always going to recommend $1,000. Should definitely never be higher than $2,500. Thanks for giving me a shout. I'm going to kick it over to Jen now, and everyone else have a great rest of your night.
Thanks, you guys. Love all of our partners. They have so much more information than we do. So hopefully you guys found that all helpful. So this will be the last section that we're going to go through tonight. Let me take off my glasses. If you guys, once again, just a quick reminder while I'm going through this, if you have any questions, to make sure to put them in the chat so we go through it. And we are going to be recording this. So if you want to send, actually, maybe Ian can put our email address in the chat. So if you want a copy of the recording, then just send us a quick email or add your email to the chat and we can go ahead and send it on. So talking about picking the right agent, it is kind of important to make sure that you do take the time. A lot of people nowadays are interviewing agents. Some people just fall into them, but it's really important to make sure that it's a good fit. So some of the things to consider when you are looking for an agent is a partnership. You want to make sure that that agent is looking out for your best interests. You also want to make sure that you're comfortable with them, that sometimes I say just even the same style. So most of us agents, we all kind of do a lot for our clients. So the difference is a lot of times, like, do you click or do you not click with that person? So it's important to get to know them and make sure it's a good fit. Team approach, that's something that it's been a lot more popular lately. So many agents work on their own, which is great, and they're full service and everything else. Some people work in teams, and when you're looking at a team or someone who's on a team, something you might want to ask is just to make sure that that person that you're meeting with or that you're initially going out with is going to be kind of your point of contact, that they are going to work with you, and that you kind of have that one person that you're going to be able to work with. The positive on the team approach is if that one person is, say, out of town or not available or showing a house when you have to get into another house, there's usually coverage from someone else in the team. So if you hear teams, just make sure that you ask that agent, what does the team mean? Is it going to be, I'm working with you until the next piece in the process, and then I'm turning over to someone else? Or is it more about coverage? How is that team structured? So it's important to understand that. You want to make sure that you definitely have a full-time agent. Our industry is interesting in the fact that I think the top 10% of the agents do 90% of the business. So lots of people have their license, but do not do it as a full-time job. And the difference is for you, if you're working as a buyer with someone who's not full-time, they might not be able to get you into that home in a timely manner before multiple offers. They might not be able to, they probably don't have the background. It takes a lot of education being able to constantly understand what's happening in the market and the changes and everything else. So if you're a part-time agent, I mean, I feel for them because it's hard to have another job and do this. This is a full-time job. So make sure that who you're dealing with is a full-time agent. Area knowledge is really important. Some agents feel comfortable kind of going everywhere in Chicago. I highly suggest that if you're working with someone, that you work with someone who really knows those areas that you are interested in, because there's different nuances in every town as to maybe why one street is more expensive than another street. And it's important when they're representing you as a buyer that they do know the difference between this school district versus that school district, which drives price a lot of times. So you want to make sure that they're familiar with the area and have a good knowledge of the area that you are considering or looking in. You want to make sure you have an agent that's proactive. Every one of you guys have an app that gives you a new listing that comes up 2 seconds, after it's on the MLS. So that's great. But then you want to make sure that that agent is also reaching out to you saying, this is a really good listing. This is something that is going to go quickly. This is something that's going to meet your needs. When you go to set up those alerts or you're on a website, it's very hard. If you put in a lot of criteria, then you might be limited in what you get and miss something that's really great. If you put in almost no criteria, then you're getting a million that you have to kind of weed through. So you want an agent who is really doing that for you, that is proactively reaching out to you and saying, hey, this listing meets your criteria and this is something that you want to go and take a look at. Customer satisfaction is a really general term, but you want to make sure that that agent has good ratings, or people ask me for reviews all the time, or to be able to talk to someone else that I've worked with prior, just to get a feel for, how we work with our clients. So it's completely okay to ask for a reference or something along that lines if you can't find reviews. And one of the most important things right now is what we call access to off-market listings. So agents, we have a lot of different little tricks where we can find those listings that aren't out in the world in the MLS. We have access to what we call a private network, where we can see the kind of the coming soons. But then also if we're working in a certain area, then a lot of times we're networking with other agents and we know about listings that are coming on before they even come on. So it's really advantageous for a buyer to be able to work with an agent who can kind of find those off-market listings or give you like a little bit of an edge to get into that good listing before it goes out to the world. Those are all things to consider if you're working with an agent. And that pretty much concludes our full presentation. But I did notice that there are a few things in the chat. So I'm going to read through them. And if I need our partners to come up and answer, then I'm going to grab them. Okay, so the first one is, how long does it take to close a home usually? Does working with a specific lender, agent, or legal representation make the process go faster? Also, is there anything that I can do on my end to make sure the process is fast and smooth? A lot of questions in one. So as far as how long does it take to close on a home usually, and I don't know if Ian wants to chime in, but us as agents, we generally tell the buyers to plan on anywhere from 30 to 45 days. I know the lenders really drive that a lot of times because it's how quickly can you get through that mortgage process. If it's a cash, then you're pretty much just dealing with the title side and you can do it in 2 weeks, Christina's saying. With the lending, right, 30 to 45 days.
Well, we could do 2 weeks. It depends a lot on you as a buyer as well. If we need an appraisal, that'll dictate a lot of it. You cannot close a loan faster than 8 days, 8 calendar days. That's there's something called the Real Estate Settlement Procedures Act, RESPA. So there's disclosure requirements when we send you an application. We've got to wait certain 8 days. That's as fast as we can go.
And then as far as working with a specific lender, agent, or legal representative, go any faster? I would just say, I mean, going back to like kind of what I was talking about when you're looking for an agent, it's also a lot of times the same with the lender and the attorney. Some of them work quicker than others. Some are more on top of what they're doing. So you just want to make sure that you are really working with a person who is knowledgeable, who's been in the business, who knows what they're doing. Because especially on the lender side, never Ian, because believe me, all your deals go quickly.
Working with a team so that we're communicating, the
Yeah,
attorney's
yeah.
communicating, Sean's there with the insurance, Johnny on the spot.
It makes it much quicker
Without question.
if you're using, our preferred vendors. For us, it's easier too because we work together all the time. So our communication is really quick when we're doing stuff. And as far as making it fast and smooth, I would say as much as you can do before you even start looking, kind of that legwork, picking the people you want to work with, making sure that you're pre-approved. Those things all make it kind of easier to jump on that house when you find the house that you want. And then a lot of stuff is lined up, if you have the right people working with you.
Absolutely.
Hopefully that answers that. Can you explain the dual agency thing again? Why would I run into that? So as Carrie was saying, with the dual agency, it's basically when there's one agent on both sides, one agent that is representing the seller and the buyer. It's really not ideal. Us as agents, we do not love it. And we actually, I shouldn't say try to avoid it, but it is a very tricky situation. So what happens is if I'm representing the seller, I have a listing and someone comes and calls off my open house or comes to my open house or calls a sign, the phone number on the sign and says, hey, I want to go look at it. First thing I need to do is explain to that buyer that I represent the seller. And if the seller's okay with me being a dual agent and the buyer's okay with it, then sure, I can show it to them. And I can only give information to the buyer that the seller allows me to do. I can only give information to the seller that the buyer allows me to disclose. So I become the middleman and I really can't negotiate on either behalf. It's not great for the seller. It's not great for the buyer. So I would say if you kind of run into that situation, it'd be better just to have your own buyer's agent instead of reaching out to the listing agent directly, and make sure that you're getting them involved so that you don't, kind of give information that you don't want to give. Or also that you're able to, if you like that house, then you have someone who is with you who can then negotiate on your behalf and pull comps and everything. So I just think it's important. The other thing that people think is that if you go directly to the listing agent, you can somehow save money on commission, but you do not. So the commission is between, not even me, it's between the seller and the listing brokerage, which is the company that we work under. They do not change that commission just because there's not another agent on the other side. The seller still pays the same. And so it doesn't really make any difference to the seller and the buyer, except for you're kind of losing, you're negotiating on it. So let me see, how much are the transfer taxes? Is there a contingency clause that states I will buy your home when I sell my home? Contingency clause, oh, yeah, okay.
I'm gonna jump in for this one.
Yeah.
So transfer taxes really just depend on whatever the municipality sets them at for the buyers, because as I mentioned earlier, the state and the county are always paid by seller. Arlington Heights doesn't have one, for example. In Chicago, it's $3.75 per $500 of purchase price. So you take your purchase price, you divide it by 500, and you multiply that number by 3.75. So it really just depends. And Chicago is probably the highest. I think Cicero is right up there with Chicago, but otherwise, all of the suburbs that do charge one are generally, it's significantly lower, where it might be somewhere between 500 to 1,500. Again, it depends on the purchase price, but just for sort of your average home, that's in the $350,000 to $400,000 range. And then, yes, there is, I did mention this earlier, I apologize, there is a potential to add what's called a sales contingency. So that's a contingency that you write into your purchase offer to make your obligations to close on your purchase contingent upon selling your current home. It's not something sellers love to see, obviously, because it's one more hurdle to get through. And it's something that's completely out of seller's control, right? What happens with your sale and what your buyer is doing, and seller doesn't have any sort of details or information on that, right? That being said, we still see them, not all the time, but it's not unusual to see them. I would recommend that if you do want to consider that, you don't make an offer to buy something until you're already under contract for your sale. There's a whole section to fill out that's going to say, are you under contract? If you are under contract, is there a mortgage contingency? Is there a sales contingency on that? And the problem with them is we get into this domino effect where if something goes wrong with one buyer, with your buyer on your sale, it's going to impact your ability to close on your purchase, which impacts then your seller's ability to close on their next purchase. So it just sort of goes on and on and on, which is why sellers don't really like it, but it is definitely an option and something that we do see, from time to time.
And then I think this is the last question. How many potential homes should I visit before I make a decision on a new home? Is it good to check out multiple options? All realtors, I think, have different philosophies on this. I'm one that I like to say that you want to take a look at homes. So the earlier you can get involved with the realtor in the process, sometimes the better. When you're scrolling through and looking at homes on your phone, either they all look great or they all look horrible. So it really depends on that listing agent. Did they take the pictures from their cell phone? Did they not take any pictures? Did they bring in a very high-end photographer to take the most beautiful pictures? Many times you go out and look at that home and you don't even recognize it from what you saw on the web. So it is important, I think, to get into homes before you're necessarily making a decision. But that being said, I've walked into plenty of homes with people where they fell in love in the first home. So it does happen. And at that point, I don't tell them that they need to go and see a bunch of them, because honestly, it's a lot of times it's a feel, and it's a very personal decision, and it's your home. So if you fall in love with that first home, then you need to really lean on the agent to say, is this a good value? Am I paying too much? Is this, what should I be looking for here that might prevent me from moving forward. So it's not that you necessarily have to get on in all the homes, though I find many people, if they look at lots of homes, then they feel really comfortable to make that decision when that perfect home comes up. But all the time it happens where someone sees one or two homes and finds the home that they want. So I think that's all that we have on here. So once again, just keep in mind, if you guys, Ian had put in the chat everyone's email address. So feel free to reach out to your agent if you want a recording, or just actually you can inquire through our website at ortmangroup.com. And I appreciate everyone for taking the time. Tried to keep this short and sweet. And thanks to our vendors too.